Welcome to the Coin Bureau Weekly News Roundup. My name is Jessica.
And my name is Guy. Here are the top stories in crypto this week.
Better believe it. BTC almost touches 38k due to speculation the SEC could approve a spot Bitcoin ETF between now and Friday. Where is the crypto market headed next?
FOMO Part Two. BlackRock reportedly files for a spot Ethereum ETF, causing ETH to pump more than 10% in a day. Why is BlackRock declining to comment?
Haters in disbelief. Sol rallies by almost 50% in a week as SBS trial ends and Gary Gensler greenlights an FTX reboot. How much higher could Sol go?
Black Swan Week. The October CPI is set for release while the US government risks a shutdown and Chinese President Xi Jinping visits America. Everything you need to know.
And a closer look at last week's top performing cryptos and where they could be headed next.
All this and more in just a moment. Last week, BTC experienced an explosive rally that sent it from 35k to almost 38k, a pump of nearly 10%. As noted a few moments ago, this was likely due to the revelation that the first window for the SEC to approve all outstanding spot Bitcoin ETF applications had opened. Now that open window lasts from Thursday the 9th of November to Friday the 17th of November. Now this is according to Bloomberg ETF analysts James Seyffart and Eric Balkunas, the latter of whom has been the primary source for much of the spot Bitcoin ETF speculation. Both analysts believe there is a 90% chance that a spot Bitcoin ETF will be approved by the 10th of January. But there are a few caveats. The first is that it could take weeks, if not months, for a spot Bitcoin ETF to begin trading after it's approved. As explained by James, this is because of the two-step process involved in filing for a spot Bitcoin ETF. The TLDR is the SEC could follow this process in a way that could cause a 1-month delay. The second caveat is that a government shutdown later this week could potentially delay the decisions on all 12 of the applications. According to SEC Chairman Gary Gensler, that's because the SEC would operate with minimal staff during this period. More about that later. Now, the third caveat is that the approval of a spot Bitcoin ETF could be a sell the news event given current market conditions. In other words, the approval itself could be the catalyst for the rally, while the actual launch of the ETF could be met with lackluster inflows, like the Ethereum Futures ETF. On that note, some believe that the approval of a spot Bitcoin ETF has been mostly priced in already. This is possible given that the consensus view is that approval is imminent. Of course, the tail risk in this case would be that the SEC rejects all ETF applications, but that seems very unlikely at this point. Anyway, tail risks aside, BTC's recent rally has continued to defy gravity. By that I mean that it's essentially violated every traditional technical analysis indicator. The only reliable indicator left appears to be resistance. Past price action suggests BTC faces a lot of sell pressure between 37 and 40k. Getting above this zone will likely require a more tangible crypto catalyst. Consider that the recent rally has been driven almost entirely by the speculation that a spot Bitcoin ETF would be approved. As mentioned a few moments ago, an actual ETF approval could be that more meaningful catalyst. Breaking above 40k would likely send BTC to around 45k. This would likely put BTC into overbought territory on every timeframe and is circumstantial evidence to the idea that the approval would be the catalyst for a blow-off top. Then again, BTC has continued to defy gravity in this regard. By the end of this week, we should get a better sense of where BTC is going. If there's no spot Bitcoin ETF approval by Friday, then BTC could experience a long overdue correction. That's because the next window for the SEC to approve a spot Bitcoin ETF won't come around until January next year. Now, If you want to try and trade this move, then check out the Coin Bureau deals page. It has trading fee discounts of up to 60% and bonuses of up to $40,000 on the best crypto exchanges. The deals are only available to the viewers of this channel and for a limited time only, so take advantage of them while you can. The link will, of course, be down in the description. Anyhow, what everyone is wondering now is what the timeline will be for a spot Ethereum ETF approval. In case you missed the news, BlackRock recently incorporated a corporate entity for a spot Ethereum ETF. As always, this news went viral thanks to Bloomberg ETF analyst Eric Balchunas. The caveat in this case was that incorporating an entity was just the first step to BlackRock filing for a spot Ethereum ETF. The second step apparently involved filing an application with the Nasdaq exchange, something BlackRock subsequently did. And finally, the application was filed with the SEC. After the crypto community had a chance to read the filing, many analysts noted an important argument from the asset manager. The SEC has no right to refuse a spot Ethereum ETF application because it has already approved multiple Ethereum futures ETFs. For context, the SEC has refused to approve spot crypto ETFs on the grounds that the spot market could be manipulated. The thing is that the crypto futures ETFs are based on BTC and ETH futures on the Chicago Mercantile Exchange, which are in turn based on the spot prices of BTC and ETH. This is an argument that's been made before and might be a part of why ARK Invest and 21 Shares both filed for spot Ethereum ETFs in September. Back then, Eric Balchunas predicted that more applications would follow. He was right, and we will likely see more asset managers line up behind BlackRock. Now, not surprisingly, ETH exploded on the news of BlackRock's spot Ethereum ETF filing. What is surprising is that ETH started giving up some of these gains the very next day. As you can see, ETH experienced a god candle much like BTC did a couple of weeks ago. The difference is that it started to drift down. This could be explained by the fact that BlackRock wasn't the first to file for a spot Ethereum ETF. As I just mentioned, ARK Invest and 21 Shares were the first back in September. As Eric pointed out, it was only a matter of time before other asset managers followed suit. As such, it could have been priced in. We'll find out in the coming days when we get more updates about new and existing spot Ethereum ETF applications. If the hype cycle for the spot Bitcoin ETF is anything to go by, ETH should see significant gains from the speculation by ETF analysts and others on social media. If you watched yesterday's video about how to trade crypto, you'll know that this is part and parcel of crypto market cycles. First, BTC pumps, and then ETH follows suit. So far, the inflows into ETH have been lackluster, but it's possible that the spot Ethereum ETF filing will finally cause some market rotation. For reference, ETH catching up to BTC's recent rally could translate to a pump of 20 to 40%. The ETH BTC chart suggests that ETH could rally against BTC for one more week, so it's possible that we will see this explosive growth over the next 7 days. The right catalysts are certainly in place for that. And if you're enjoying the video so far, be sure to smash the like button to help others find it. Now, the caveat in this case is that all eyes have been on Solana's Sol over the last few weeks. That's because it's probably seen the biggest gains of any large-cap altcoin over this period. To put things into perspective, Sol was less than $20 in September. At the time of shooting, it's over $60. This almost 4x gain makes sense when you consider the circumstances, though. If you watched our last Solana update, you'll know that the project was closely affiliated with FTX and Alameda Research. By closely affiliated, I mean that FTX and Alameda owned around 15% of Sol's total supply. And not only that, but Solana was FTX's de facto exchange chain, like BNB for Binance. And FTX and Alameda were also pouring the most money into Solana's ecosystem. When FTX collapsed in November last year, Sol was hit the hardest, and for a while, it looked like its entire ecosystem was finished. To add insult to injury, the SEC labelled Sol as an unregistered security in its lawsuits against Binance and Coinbase in the summer. In practical terms, this meant that there was a real risk of Sol getting delisted from US exchanges, a big problem considering that Solana is effectively based in the United States. When the trial of FTX and Alameda Research founder Sam Bankman-Fried began in October, there was widespread speculation that it would be bad news for Solana given its proximity to the two entities. Some of you might recall that Solana was mentioned a few times, and this caused Sol to crash. As time went on, however, it became clear that Solana wasn't a material part of FTX or Alameda Research's wrongdoings. This realization was likely the biggest contributing factor to Sol's sudden recovery. It definitely helped that Solana's Breakpoint conference took place during the endgame period of the trial. But it seems that the real catalyst was Gary Gensler confirming that he was open to FTX restarting after its bankruptcy process. Case in point, the news appears to have caused Sol to pump 30% in a single day. This begs the question of why the prospect of an FTX restart is so bullish for Solana. Well, our best guess is that this is due to a combination of the fact that restarting the exchange could mean that less Sol will have to be sold to pay back FTX creditors, and the possibility that the new exchange could leverage Solana in some way. This would make sense given that the infrastructure is presumably there. Speaking of which, many whale watchers have observed hundreds of millions of dollars worth of Sol being sent to exchanges during the recent pump, including from wallets associated with FTX and Alameda. This apparent sell pressure makes Sol's price action paradoxically more impressive. And, more importantly, it suggests that Sol could pump even higher once all of this sell pressure is gone. Unfortunately, it's anyone's guess as to when this could be. Fortunately, though, the charts suggest that Sol's next zone of price resistance is all the way up around $80. That means room for more rallies. Whether or not Sol reaches that price target ultimately depends on what the rest of the crypto market is doing, namely BTC. Any negative news about the spot Bitcoin or Ethereum ETFs could drag Sol down with BTC and ETH. For the first time in a while, macro catalysts could play a role in Sol's price as well. Now, amidst all the excitement around pumping crypto prices, you'd be forgiven for having overlooked the fact that the US CPI for October will be released today at 8:30 a.m. CET. Depending on when you see this video, the CPI figures could in fact already be out. Although the last CPI print didn't have much of an impact on crypto prices, this CPI print could be different if it comes in higher than expected. That's because last month's CPI came in higher than expected too. 2 months of higher than expected CPI could be interpreted by investors to mean that a second wave of inflation is forming. In turn, this could increase the chances that the Fed will stop its pause and start raising rates again. While investors are currently not pricing in the possibility of another hike, hawkish comments by Fed Chairman Jerome Powell last week appear to have slightly increased this admittedly low expectation. Another hot CPI print and more hawkish comments could change this consensus and upset the markets. Meanwhile, another wild card in this regard is the looming government shutdown. If this story sounds familiar, that's because the US government almost shut down in late September due to an inability to agree on government funding. To refresh your memory, a temporary funding bill was passed at the last minute. And this temporary funding bill kicked the can down the road to the 17th of November, which you'll remember is this Friday. Since the time the can was kicked, Speaker of the House Kevin McCarthy was kicked with it, and a new Speaker of the House named Mike Johnson was appointed. Fairly recently, I might add, too. Like his predecessor, Mike has proposed to kick the by now pretty dented can down the road again with a temporary funding bill. The difference this time around is that Mike, a Republican, reportedly isn't as keen to compromise with the Democrats in order to pass this bill. The White House has referred to it as, quote, extreme. Put simply, it appears that the newly appointed House Speaker is even more partisan than the last. This means that the temporary funding bill is unlikely to pass the Republican House, and even if it does, it's likely to get struck down in the Democrat-controlled Senate. The result could be an actual shutdown. Now, it's not entirely clear what effect this would have on the markets. Given that there are wars in Europe and the Middle East, which the US is indirectly involved in, a government shutdown could create more uncertainty around these conflicts, as the US may not be able to, shall we say, monitor them as effectively. And against this backdrop, you also have Chinese President Xi Jinping flying to the United States to speak with US President Joe Biden about these wars and the geopolitics behind them. Xi and Biden are expected to meet on Wednesday, though Xi will stick around until this fateful Friday. If you watched our recent video about the Third World War, you'll know that many of the regional conflicts we've seen around the world have involved the US supporting one side and China supporting the other. You'll also know that the US and China appear to be engaging in an economic war of sorts. This makes Xi's meeting with Biden extremely high stakes, and the outcome could likewise have a profound impact on the markets. China is reportedly refusing to budge on key issues. If they hold their ground, the US could respond by imposing additional restrictions that could do damage to tech stocks. And it's possible that crypto could get caught up in the crossfire. Never mind the escalating tensions in the Middle East and all the FUD about crypto being used to fund terror-related activities. However, with all that said, crypto continues to rally, and last week's top-performing cryptos melted faces. So, here's Jessica to tell you all about them.
Thanks, Guy. Face melting indeed. So last week's top-performing cryptos were Audi, the FTX token, Celestia, Terra, and Kronos. There's quite a bit to unpack here. Starting with Audi, the Audi token pumped on the news that Binance would be listing the token. For those that are unfamiliar, Audi is a token for the Ordinals NFT protocol on Bitcoin. As you can see, Audi has gone parabolic over the last few days. There is no telling how high it could go, but it has been approaching its initial exchange price of $25. This is where Audi could be rejected. Alternatively, it could break above this level and continue its apparent price discovery. Next up, we have FTX's token, or FTT, which pumped for reasons that you'll hopefully recall, namely the end of SBF's trial and Gary's openness to the idea of restarting the FTX exchange. As you can see, FTT's recent price pump barely registers on the long-term price chart. Even so, it's worth noting that FTT's price was around these levels before it rallied to over $70 during the last bull market. Like Audi, this means that FTT is at a make or break point in its parabolic move. When it comes to Celestia, its TIA coin has been rallying ever since its mainnet launched on the 31st of October. The simultaneous listing of TIA on Binance definitely gave it a boost too. Like Audi and FTT, TIA is in price discovery mode, so there is no telling just how high it could go. As a rule of thumb though, you can expect to see some significant sell pressure at psychologically significant price points like $5 and $10. The same is true for zones of support when TIA's price decides to cool down. It's a similar story for Terra's Luna coin. It's been rallying ever since the community passed a proposal that will see Terraform Labs engage in a series of actions meant to revive the ecosystem. This includes funding ecosystem growth, changing Terra's fee structure, and the creation of a new community council. Like FTT, Luna's recent price pump barely registers on the long-term chart, and its current price of around 80 cents appears to be a significant zone of resistance. It's hard to see how the hype around the recent proposal can keep the rally going, but it's clear that everyone is feeling the FOMO these days. Finally, we have Kronos' Crow coin, formerly known as the Crypto.com coin. Crow appears to have rallied because of the UFC fight over the weekend. Remember that Crypto.com inked a $175 million sponsorship deal with UFC back in June 2021, which ensures that its lion logo is seen everywhere. Lo and behold, Crow's recent rally has taken it up to a key resistance level at around 10 cents. In the absence of any additional catalyst related to Crypto.com, it's likely that Crow will be rejected at these levels and consolidate before moving higher or lower. So if you want to know which cryptos are pumping the most and also where you can trade them, be sure to check out the Coin Bureau Telegram channel. I'll leave a link in the description below.
And that's all for today's Coin Bureau Weekly Crypto Review.
If you enjoyed it, then you know what to do. Hit that like button, subscribe button, and the bell icon too.
Don't forget to check out our deals page where we have massive discounts and airdrop bonuses of up to $40,000 on some of the best exchanges, only for the viewers of this channel.
Also, if you want to pick up some snazzy crypto merch, you can head over to the Coin Bureau merch store where it has it all.
You can find the link to that resource and many others in the description below.
Thank you so much for watching, and we'll see you in next week's episode.